Hello, a very, very lovely good evening down here, as always, from Delhi, and great welcome to one and all. So here, in this particular session, as always, you are quite curious. I know, sir, what we are going to do today. So, of course, we are going to do today buyback of shares, and for the same we have assembled here. So if you are ready, we too are ready on our side. So coming straight away to the business end, we are going to start buyback of share. But before that, first of all, let me actually write the name of the chapter. Buyback of shares, we are going to start now. Buyback of shares. Buyback of shares. Sir, you write very slowly. I do understand, but you have to make very neat presentation, and your work should be absolutely neat, spick and span. You know the meaning of spick and span? Absolutely neat and absolutely tidy. So buyback of shares, we are going to actually start, no doubt about that. But before we start in actual terms, buyback of share, what we are going to do in this particular session, we are going to have a comprehensive dialogue on the balance sheet. Yes, balance sheet. We are not going to start straight away buyback of share. We definitely will start it. But before that, I would love you to have a deep, insightful, and extraordinary knowledge of each and every component of the balance sheet, because it will definitely come very, very handy for you to especially face later on heavy chapters such as amalgamation, such as internal reconstruction, or for that instance, to acquire a great level of proficiency in any chapter of corporate accountancy. So that is the reason I have decided, because I have found through my experience actually that students lack that in-depth and very, very penetrative what we call knowledge of balance sheet. So that's the reason actually I have decided that in this particular session we are going to have a great discussion with respect to balance sheet, so that you need not require to actually face any sort of trouble later on, and my work also become a little bit more easier. Correct? So we have devoted this particular session especially for the discussion on balance sheet. So first pay attention actually here. You must know, I'm just going to talk general things in this particular session. Intentionally actually I am leaving some space. So first of all, you need to know actually regarding asset side. It's a very general question. If suppose I'm going to ask you what we mean by asset side, I'm very sure that none of you will be able to deliver the correct answer. Sir, are you joking? We know very well the meaning of asset side. In fact, in real terms, I must say I was joking a little bit. So, yes, but at the same time, I would love you to tell me the meaning of asset side, because I have seen that most of the time actually students are not able to deliver answers to even such easy questions. So it is not a sort of sarcasm, it is just to make you aware of the fact that you are pursuing a very heavy professional course. So that's the reason you should be aware of each and every facet of accountancy. Now if somebody asks you, at least at this particular level, what we mean by asset side, so for God's sake, do not give the answer such as, sir, assets are resources. First of all, you must understand that my question is what we mean by asset side. I didn't say what are the asset. So asset side is nothing, but it is a collection of all such accounts having debit balances at the end of the year and which have remained what we call unclosed or which haven't been closed. Just pay attention. Suppose these are ledger accounts, correct? It is fixed asset. There is debit balance in it, say. There are some current asset. Correct? Now, these are ledger balances. So, asset side is nothing, but it is a mere collection of all such accounts having debit balances at the end of the year. Remember one thing, this is your debit side, this is your credit, but this is a debit balance. So if there will be a debit balance in this particular account, it will be written on the debit side. Similarly, if in this particular account there is a debit balance, it will be written on the debit. Now, if in this account there is a debit balance, this account will also be written on the asset side. So, at this level, your answer should be that asset side is nothing but it is a collection of accounts having debit balances at the end of the accounting year. Is it clear to you? So, first of all, the meaning should be very, very clear. Correct? Now, suppose I say there are 3 accounts and all these 3 accounts are showing a debit balance. Correct? This is fixed asset, this is current asset, this is preliminary expenses. Now, fixed asset is showing a debit balance of 5 lakh, current asset is showing a debit balance of say 10 lakh, preliminary expenses is showing a balance of 3 lakh. So, all these 3 items, when I will prepare the balance sheet, on the asset side will appear. Fixed asset will appear, current asset will appear, and also preliminary expenses will also appear. But you must understand that these items are appearing on the asset side. The reason is that at the end of the accounting year, all these 3 accounts are showing debit balances. So that is the reason actually I said that asset side is nothing but it is a mere collection of ledger accounts having debit balances at the end of the accounting year. However, all the items which appear on the asset side cannot be classified as assets. So please pay attention. So these are the points I wanted to clarify. I wanted to clarify so that there is no problem later on, especially when we pick up heavy chapters. Correct? So on to the asset side, we have moved and we have seen actually these 3 accounts are appearing: fixed asset, current asset, and preliminary expenses. Listen to my point very carefully. All such items which appear on the asset side are not assets. There is a difference between asset side and assets. Try to understand. Asset side is a collection of accounts having debit balances. Is it clear to you? Number 1. Number 2. Asset side can be broadly classified into 2 parts. One fixed asset, one assets, and another one is valueless assets. Asset side can be broadly classified into 2 parts. One is assets and another one is valueless asset. I will write it. Assets and valueless assets. So, important point is all such items which appear on the asset side cannot be treated as asset. Only such accounts which have got some monetary value, for example fixed asset and current asset, if I will try to sell them, chances are there that my efforts will fructify and I will be able to realize some cash. So all such debit balances which command monetary value are basically classified as asset. This is the first pertinent point which you should know. Now, if henceforth somebody asks you what we mean by assets, so your answer should be very straight and should be absolutely crisp, that assets means such debit balances which command monetary value. Assets means such debit balances which command monetary value. So, as per this definition, we can say that as far as assets are concerned, on the asset side, assets are fixed asset and current assets only. Assets are broadly classified into fixed assets and current assets. It is an important point for you to understand. In the definition of asset, we include only fixed asset and current asset. So first major point is that all such items which appear on the asset side cannot be treated as assets. Only such debit balances which have monetary value can be treated as assets. This is the point I wanted to bring to your notice. Now, as you can see, as far as preliminary expense is concerned, it is written towards the asset side. The reason is that this is having a debit balance. That is the reason why it is appearing towards the asset side. But the important point is that preliminary expenses cannot command any monetary value. If I would sell preliminary expenses, would I be able to sell them? Something which is invisible cannot be sold out, isn't it or not? So, I mean to say is that it is appearing on the asset side, but preliminary expenses cannot be classified as assets. So, you must understand that all such items which appears on the asset side are not assets. Only fixed asset and current asset are assets, and such debit balances which appear on the asset side and which do not command any monetary value are categorized as valueless assets. So asset side is broadly divided into two parts. One is assets and another one is valueless assets. It is called as valueless asset. Is it clear to you? Valueless assets. Valueless assets. So asset side is broadly divided into two types. You must be aware of this particular fact. So now meaning of asset side should be absolutely clearer to you. Correct? And what exactly asset? It should be absolutely crystal clear to you. And at the same time, you must know the meaning of valueless asset. Valueless assets are debit balances at the end of the year which appear on the asset side but actually are not assets because they do not command any monetary value. Examples. I will write the examples for you. As far as valueless assets are concerned, valueless assets, it will include preliminary expenses. Please pay attention. Preliminary expenses. Preliminary expenses. Correct. It will also include underwriting commission. Underwriting commission. If you want to write, you can do so. Underwriting commission. All these are valueless asset. Underwriting commission. It will also include discount on issue of shares and debentures. Discount on issue of shares and debentures. On shares and debentures. You should have comprehensive knowledge of balance sheet. You should have comprehensive what we call expertise as far as each and every component of the balance sheet is concerned. Then only you will be able to acquire complete, solid, comprehensive and in-depth what we call proficiency over this particular subject. So, valueless assets, correct? Valueless assets sometimes are also referred to as miscellaneous expenditure, and you are under a habit of calling them as fictitious items. Anyway, so these are valueless assets. Remember one thing, during my entire what we call lecture series, if I'm saying assets, that means I'm referring to only fixed asset and current asset. Is it clear to you? Now, I need not require to explain what we mean by fixed asset. You know the fixed asset, you know the meaning of current asset. Is it clear to you? So, regarding asset side, we have done a little bit of discussion, and now we shall what we call stretch our discussion to the liability side. As far as liability side is concerned, this is pretty tricky one, liability side. So you should have a good knowledge of the liability side also. So my first question is, what do you mean by liability side? I'm not asking what is liability. I'm simply asking liability side. Liability side is nothing but it is a collection of accounts at the end of the accounting year reflecting credit balances. Is it clear to you? So if somebody inquires of you that what do you mean by liability side, you should be in a position to give him a reply, straight reply, that liability side is a mere collection of accounts having what we call credit balances at the end of the accounting year. Now, in order to have a better understanding of the liability side can be broadly classified into three types. Liability side, for simplicity's sake, we can segregate it into three parts, correct? Part 1, Part A, liability side. I'm talking about liability side now. Part A is capital, of course, correct? Part A is your capital. I need not require to elaborate capital. Part B is related with what? Part B is related with your reserves and surplus, and you need to develop a deep knowledge regarding the reserves and surplus of the company. Reserves and surplus. Then it will definitely stood in a good stead to have complete proficiency. Reserve and surplus. Correct? Or simplicity's sake, I will simply write reserves. Correct? And third one is liability. So entire liability side can be divided into three types. Correct? Capital, reserves, and liabilities. And you need to have, as I keep on telling you, a solid, in-depthful and insightful knowledge of every component of the balance sheet just to acquire complete mastery over the subject. The first point I'm going to take is reserve. You need to have a good knowledge regarding the reserves of the company. Now, as far as reserves are concerned, the reserves of the company can be classified into, or should I write separately? Well, I will write it here separately. So we are picking up reserves now first. Reserves. Point number B. As far as reserves are concerned, reserves of an entity can be categorized into three divisions. Reserves can be divided into three segments, correct? Segment 1A. Segment 1, I will call it free reserves, correct? Free reserves. Segment 1 is free reserves. Segment B. Segment B is your specific reserve, correct? Specific reserve. Specific reserves. Specific reserves. And then segment C. That means reserves of an entity are of these many types: free reserve, specific reserve, then statutory reserve, STATUTORY, statutory reserves. So all the free reserves of a particular entity can be segregated into three types. Is it clear to you or not? So it is clear to us. Now I would love you to know what exactly free reserves are, and what exactly specific reserves are, and what exactly, of course, statutory reserves are. Free reserves, before we elaborate, you must know the meaning of free reserves. Is it clear to you or not? So as far as free reserves are concerned, I'm writing it here, free reserves. Correct? Just to save the space, I'm writing here free reserves. Well, you might be wondering, sir, why you are not writing over here? Actually, I just want to keep some space for me. Well, free reserves. First of all, I am making a list of free reserve. Correct? Free reserves. You must understand that free reserves can be broadly classified into two types. Free reserves are further segregated into revenue reserves, revenue reserves, and capital nature reserves. That means free reserves comprises of both revenue reserves and capital nature reserves. Is it clear to you or not? So first of all, I am making a list of free reserve, and even under free reserve, first of all, I am taking revenue nature reserves. Under free reserves, I am first of all taking revenue nature reserves. Is it clear to you? All these are revenue nature reserves. Revenue nature reserves. So Under free reserve, first of all, we are picking up revenue nature reserves, that is profit and loss account credit balance, correct? Profit and loss account credit balance, then general reserve, general reserves. General reserve is enough. Then reserve fund, actually reserve fund and general reserve are one and same thing. General reserve, reserve fund, dividend equalization 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 fund, insurance fund, insurance fund, sinking fund. All these are examples of free reserves and all these are revenue nature reserves. Sinking fund. Then workmen compensation fund, which you have heard a lot about. It is not a liability. You must understand. That is the reason why I want you to actually have a deep and comprehensive knowledge of the items of balance sheet. Workmen compensation fund. Workmen compensation fund is also known as workmen compensation reserve. So workmen compensation fund. So all these items are of revenue nature. You must understand that all these are reserves. And there are some capital nature reserves. Capital nature reserves. Remember one thing, in your entire company accounts, revenue reserve and capital nature reserves are going to play a very, very significant role. So capital nature reserves, now we are going to write capital nature reserves. Capital nature reserves. As far as capital nature, remember one thing, capital nature reserves will also fall under the broad category of free reserves. Now, as far as capital nature reserves are concerned, generally we include under it security premium, securities premium or security premium. Then we will also include capital reserve, capital reserve, capital reserves, correct? Then you should also be a little bit have an idea that capital redemption reserve, capital redemption reserve, capital redemption reserve, share forfeited balance, share forfeited balance. If there is a balance in share forfeited account, it will be treated as capital nature reserve. Then profit prior to incorporation, profit prior to incorporation. There is a long list. Profit prior to incorporation. So you should have a very good knowledge regarding the revenue nature reserve. Profit prior to incorporation. Correct? Profit prior to incorporation. So all these items are of capital nature. Just a second. Yes. So first of all, you need to have a good what we call idea regarding the free reserves. As I just said a moment ago, you must know that free reserves can be further segregated into two types. One revenue reserve, another one happens to be capital nature reserve. Now you should know the meaning of revenue reserve. Now suppose if I would ask you a very simple question, what do you mean by revenue reserve? Now what will be your answer? Now very simple to understand. Please pay attention. This is your trading account. This is your profit and loss account. This is your trading. This is your profit and loss account. This is your profit and loss appropriation account. Now, if at this particular level somebody asks you, what do you mean by revenue nature reserve? As I keep on saying, your answer should be solid, to the point and brisk, and it should have such cutting credibility that other person becomes answerless. Now, please pay attention. What we mean by revenue nature reserves. Any reserve which carves out a place through these routes, that is known as revenue reserves. Is it clear to you? You didn't get my point. Any reserve which is carving, which is creating, correct, a place in the balance sheet through these routes, then it is a revenue nature reserve. It is as simple to define it. For example, when you pass entry profit and loss appropriation account debit to general reserve. So general reserve is creating a place in the balance sheet through this particular route. So any reserve which creates its what we call place in the balance sheet through trading account, profit and loss account, or profit and loss appropriation account, are categorized in account as revenue reserve. Is it clear to you? That is how at this level you should have the what we call art of expressing yourself. So these are the things actually I wanted to bring to your notice. That is the reason I decided to actually hold down this particular session. Is it clear to you? And similarly, now if somebody asks, what do you mean by capital nature reserve? You need not require to wink your eyes and start flicking your eyes. Correct? It is very simple. Any reserve which creates a place in the balance sheet, any reserve which creates a place for itself through balance sheet route, then it is a capital nature reserve. For example, just pay attention. Suppose if I write a entry, bank account debit to security, to share capital account, to security premium account. If I am going to create this particular entry, what will happen? All these three items are of balance sheet item. Bank will appear here, share capital will appear here, security premium will appear here. So you can say that security premium has been able to create a place for itself through the route of balance sheet. So any reserve which creates a route which creates a place through these routes, that is balance sheet route, then it can be what we call categorized as I said, capital nature reserve. So it's pretty simple, but at the same time you should know the art of expressing capital nature reserve and revenue nature reserves. And you should have a very good knowledge, because especially when we are going to do buyback of shares and later on debentures and later on amalgamation internal reconstruction, the knowledge of these particular item should be very, very high as far as student fraternity is concerned. Then only you will be able to develop a good control over the concepts. Now, we have taken free reserve. Now we come over to specific nature reserves. What we mean by specific nature reserve? B, specific nature reserves. Specific reserves. Is it clear to you? Specific automatically means particular. Is it clear to you? So that means these reserves are created particularly against a particular asset. In fact, we have written it reserves. To be very honest with you, these are in the shape of provisions actually. Is it clear? So specific reserves generally include items such as provision for doubtful debts, provision for doubtful debts, provision for doubtful debts, then we include investment fluctuation fund, investment fluctuation fund. Investment fluctuation fund is created by an enterprise to meet any loss which may take place in the investments. As you know, investments are very, very vibrating, very, very fluctuating asset. So its value may actually move up and may come down. So in case if there is a loss, we should be in a position to meet it. We should be in a position to bear it. We should be in a position to compensate it. For this same reason, an entity sometimes prepare investment fluctuation fund. Then provision for depreciation. Provision for depreciation. Provision for depreciation is also specific reserve. Provision for depreciation, correct? Then stock reserve account. Stock reserve. So all these are specific reserves. So now you must understand that you should have why you should have a very good knowledge. So specific reserves are nothing but these are sort of provision. Is it clear to you? But at the same time, these are not liability. At the same time, these are not free reserves. So just by having a look over the balance sheet, you should be in a position to segregate the relevant item as free reserve or specific reserve. I just want to inculcate this art and skill in you. Is it clear to you? Now we will have a talk about statutory reserves. What we mean by statutory reserves. See, statutory reserves. Now, as far as statutory reserves are concerned, name itself is suggesting statutory means something which is imposed by law, something which is enforceable by law. So, statutory reserves. So, statutory reserves include statutory reserves. First of all, are supposed to be made by such entities which are operating in special economic zones or free trade zones or electronic park or software parks. All these things are nothing but notified zones. So in order to develop a particular area, government sometime actually notifies a particular zone as a special zone or as a special economic zone or as a what we call free trade zone or industrial park, software park, and etc. you can say. So the basic purpose of the government is to develop that particular area. So enterprises which operate in notified zones are under compulsion by the law of the land to what we call transfer some amount of their profits towards some reserves known as statutory reserves. So statutory reserves will include one, that is foreign export reserve, also known as foreign export reserve, is also known as foreign project account, correct? Then similarly development reserve, that is development rebate reserve. Development reserve, that is investment allowance reserve. To be very honest with you, development reserve and investment allowance reserve are one and same thing. Investment allowance reserve. So you should have a good idea regarding the reserves of the company. Is it clear to you or not? Why I took up this particular topic? Just to make you aware of the fact that each and every component is known to you and you are well efficient in it, correct? Your important skill should be to categorize a particular item into proper categories, that is specific reserve, statutory reserve, or for that instance free reserve, and even among free reserve, revenue reserve and capital reserve. So now, after having a look over what we call reserves, now we take liabilities. You need to have a little bit of knowledge regarding liabilities also, so which you know already, but at the same time I will write it for your convenience. Liabilities. Now, as far as liabilities are concerned, this is item number C, dealing with liabilities. So liability means something for which an entity is under pressure to honor the same in time, otherwise punitive action could be initiated against the entity. That is what we mean by liability. For example, if my entity has raised a loan, then I am under a legal compulsion to pay the loan in time. And if I won't, then punishable action, punitive action means punishable action can be initiated against me. So that is why I have to honor the liability in time. And if I would fail, as I said, I would be punished. So that is what we mean by liability. Liability means something for which we means the entity is under pressure to pay it in time. So liabilities generally include, as I said, sundry creditors. Correct? You allow me to use the short form. Sundry creditor, this is how I am accustomed to writing sundry creditors. Then similarly, bills payable. Sundry creditors and bills payable are combinedly also known as trade payables or trade liabilities. Correct? Sundry creditors and bills payable are combinedly also known as trade liability. Then we need to know that bank overdraft is also a liability. You know about that, BOD, bank overdraft. Then similarly, outstanding expenses, as you know very well that outstanding expenses, is it clear to you? Of course, it is a liability. Then loans, then debentures, all these are liability. Loans, then debentures, then provision for tax, all these are considered as liability. Provision for tax. Now, there are some liability which may confuse a particular student. Correct? Now, just pay attention. For example, workmen saving bank account. It is a liability. Workmen saving bank account. So, such liabilities sometimes create confusion, and you should not be under that sort of confusion. Workmen saving bank account. Workmen saving bank account. Is it clear to you? Similarly, workmen profit sharing fund. It is a liability. It is not a fund. Workmen profit sharing fund. It is a liability. Workmen profit sharing fund. So don't get confused by the word fund. Correct? That is the reason why actually I want you to understand each and every facet of the balance sheet. Correct? Workmen profit sharing fund means there is an agreement between the entity and the workers that if you will work with greater zeal and enthusiasm and our profits would be high, then definitely we will give you some share out of it. So it is the bounded duty of the company to carry out its promise. And if company or the entity will not carry out the promise, then workers will have the doors open of the labor court. Isn't it or not? They will go to the labor court, and most of the decisions or decree of the labor court are generally in favor of the workers or laborers. So in that case, company will have to pay. So that is the reason it is considered as liability, because company is legally bounded to honor this amount. Then similarly, provident fund. Provident fund is a liability. Provident fund. Provident fund is a liability without an iota of doubt. Similarly, gratuity, you have read a lot about it in your taxation subject, gratuity. So I will not ask you what exactly gratuity is. So gratuity means payment to an employee at the time of retirement gratuitously. Gratuitously means without any encumbrances. Now, it is quite natural that still you haven't been able to understand. It means if the employee has worked with honesty and his work is very, very appreciative, then out of gratitude, company is paying him. Out of gratitude, not out of any obligation. Is it clear to you? So in order to appreciate his efforts, company is paying him some amount that is known as gratuity. Of course, it will be a liability. So now you can see that you have got complete and comprehensive knowledge of the balance sheet. Is it clear to you? Now my first question, what do you mean by asset side? Sir, asset side is collection of accounts having debit balances. Now what do you mean by assets? Sir, assets means such assets Such items which are appearing on the asset side but having monetary value. That means fixed asset and current asset only can be categorized as asset. And valueless asset means items appearing on the asset side but not commanding any monetary value, and their examples as I have written down over there: preliminary expense, underwriting, commission, discount on issue of shares, debenture, etc. The liability side is broadly segregated into capital, reserve, and liability. Capital, of course, will comprise of owner's equity, that is equity share capital, preference share capital, and besides that, reserves. Now, reserves are further, or should I say, broadly classified for simplicity's sake into three parts: free reserve, specific reserve, and statutory reserve. You need to have a depth, a very skillful knowledge regarding the free reserve, because time and again, and even in this chapter buyback of share, we are going to use a lot. So at that time, I'm not going to remind you again. So what we mean by revenue reserve, it should be absolutely clearer to you. What we mean by capital reserve, it should be absolutely clearer to you. Is it clear to you? Because we are going to use a lot when we are going to do the balance sheet. Is it clear to you or not? So after what we call having a little bit of knowledge regarding the balance sheet, so now we are in a position to attack the chapter. And we will attack it in a short while in the next session. So till then, it's a very short goodbye from here.